Howdy, y'all. Welcome to Liberty Call. Today is Thursday, November 9th, 2023. Hope everybody's having a fantastical day out there in the interwebs. It is not too bad here. The snowstorm was not nearly as bad in my part of Colorado. Some places got hammered, but there's no snow in the yard. I mean, there's a little on the rocks here and there, but the 3 to 4 inches we were supposed to get, I guess it melted when it hit the deck. So, anyways, all right. Well, I hope you're having a fantastic day out there. It is my youngest boy's 26th birthday. Do I look old enough to have a 26-year-old? Nah, I don't think so. Well, maybe with all the gray in my beard. Anyways, I hope you're having a great day out there. And if it is your first time watching Liberty Call, if you could do me a favor, yes, you in the purple shirt, I see you. Give me some thumbs up, a like, share, subscribe, follow, press that notification bell. All right, let's go ahead and get into the numbers for today. Looks like things here in America were not happy. Dow Jones was down 0.65%, 220 points, closed at 33,891. S&P 500 was down 0.78, closed at 43.48. NASDAQ down 0.94, closed at 13,521. The VIX was up 6.02% today. It's back to 1532. Canada up 0.29, Brazil down 0.08, and Mexico up 0.08. Over in Western Europe, Germany was up 0.81, the UK up 0.73, France up 1.11%, the Netherlands up 1.97, Spain up 1.31, Italy up 0.74, Switzerland up 0.47, and Portugal up 0.58. Lots of happy markets over there. Russian exchanges both red today. MOEX down 0.17, the RTSI down 0.37. And the overnights, the Nikkei in Japan was up 1.59%. Australia up 0.28. New Zealand down 1.71. Actually, they're open right now. And let's see, in China, the Shanghai was up 0.03. Shenzhen Component down 0.2. China A50 up 0.05. DJ Shanghai down 0.14. Hang Seng down a third. And Taiwan weighted was closed. All right. So kind of mixed globally, but again, looks like the steam here in America might be running out. I don't know, but we shall see what happens over the next couple days, see where things are trending. All right, market recap. U.S. stocks swing lower as Powell revives rate hike fears. Oh, no. U.S. stocks experienced a decline on Thursday as Federal Reserve Chairman Jerome Powell indicated that current monetary policy measures were not yet restrictive enough to rein in inflation, dashing the hopes that the Fed's rate hiking cycle had concluded. Told you. Powell emphasized that the FOMC was not confident it had tightened policy sufficiently to bring inflation back to the Fed's 2% target. And again, why 2%? I mean, why does everything have to get 2% more expensive every single year? I mean, that means everything doubles every 30-something years. I mean, that's just ridiculous. While Powell mentioned that cautious progression in future monetary decisions, he also stated that if necessary, the Fed would not hesitate to further tighten policy, contradicting recent optimism about the end of the Fed's hiking cycle. This news impacted Treasury yields, with the 2-year Treasury yield rising approximately 12 basis points to 4.64%. Jobless claims totaling 270,000 filings last week were in line with expectations. Becton Dixon and Company led the healthcare sector lower, declining over 9% after weaker annual guidance offset better than expected quarterly revenue. The company's 2024 earnings per share forecast of $12.70 to $13 per share and a revenue outlook of $20.1 billion to $20.34 billion missed analyst estimates. Consumer stocks, notably Tesla, face headwinds as HSBC included a sell rating expressing concerns about the company's execution timeline. HSBC highlighted CEO Elon Musk's singular influence as a risk factor and set a $146 price target. Tesla shares fell by 6%. Amidst the market decline, Walt Disney stood out with a more than 6% rise after beating earnings forecasts in its fiscal fourth quarter. The entertainment giant attributed its success to subscriber growth in its streaming services and increased attendance at theme parks in Shanghai, Hong Kong, and California. Despite concerns about demand in China and the U.S., oil prices attempted a recovery from their lowest level in 3 months. China, the largest oil importer globally, experienced disinflation in October, and the American Petroleum Institute reported a significant increase of almost 12 million barrels in U.S. crude oil stocks last week. All right. So Powell basically set the record straight that he's not ready to call an end to this. Which, again, the financial journalists, the talking heads on the financial channels, and people in on Wall Street have been just I mean, the last probably year and a half has been horrible for them because they haven't been able to get cheap money, and it's unfortunately it's the right thing to do. It's kind of like going on a diet and getting exercise and stuff. It's not fun, but if you want to live to 100, these are the things you got to do. Alrighty, next up, jobs data. New U.S. jobless claims edged down, continuing claims on the rise. The latest data from the Labor Department indicates that the number of Americans filing new claims for unemployment benefits has slightly decreased. It went up last week. I mean, they make a big deal every week, signaling that despite signs of a cooling job market, layoffs remain low. Initial claims for state unemployment benefits dropped by 3,000 to a seasonally adjusted 217,000 for the week ending November 4th, compared to an upwardly revised 220,000 for the prior week. This figure is slightly lower than the 218,000 claims anticipated by economists. However, the report also highlighted the number of individuals receiving benefits after an initial week of aid, considered a proxy for hiring, increased for the seventh consecutive week to 1.834 million during the week that ended October 28th. This marks the highest level since April, leading some economists to suggest challenges in adjusting the data for seasonal fluctuations. Yeah, these aren't real numbers. They adjust it and massage it for seasonal variances and all that BS. I just want to see the raw numbers. I mean, that's all I care about. While new layoffs remain subdued, the persistent rise in continuing claims suggests that individuals out of work are facing increased difficulty finding new employment, aligning with recent hiring data indicating a cooling job market. October's hiring pace slowed and employment ticked higher, though it remains historically low at 3.9%. The claims data adds to the argument for the U.S. Federal Reserve to maintain its current interest rates, balancing a cooling job market against its overall strength. Analysts suggest that the Fed needs to observe further softening in the labor market conditions and wage growth to be convinced that inflation is on a substantial path back to the 2% target. Despite holding interest rates steady in its recent meeting, the Fed left the door open to potential future increases, which we just talked about in the previous article. Acknowledging the economy's resilience, interest rate futures market indicate a less than 10% probability of a 10% rate or of a rate hike at the next Fed meeting in mid-December, with no further increases anticipated and potential cuts priced in by summer of 2024. It's funny, see how both of these articles, this one was this came out before Powell's comments. So, anyways, where was I? With no further increases anticipated, potential cuts by 24. Some economists, such as Nancy Van Houten of Oxford Economics, expects a gradual softening of the job market conditions, predicting that the first Fed rate cut could to occur in September instead of May, as initially forecasted. So we shall see. I mean, I imagine next year, if things go the way I believe they'll go, some sort of a downturn, bear market, recession. Yeah, the Fed's going to cut rates at that point. I wouldn't be shocked by that. But anyways. All right, last up, got an article here about some tax changes. I don't know how I missed this. This came out in September. It's titled, "The Biggest Downside to 529 Plans is About to Go Away. Now They're a No-Brainer," experts say. So there's some rules that have changed there. Thanks to the provisions of the Secure 2.0, 529 college plans are set to become even more appealing for savers. Starting in 2024, unused funds from 529 plans can be rolled over to Roth individual retirement accounts without incurring income tax or tax penalties. To qualify, the 529 account must have been open for 15 years, and contributions made in the last 5 years cannot be rolled over. The rollovers are subject to the annual Roth IRA contribution limit, with a $35,000 lifetime cap on the 529 to Roth transfers. This new feature adds to the existing benefits of 529 plans, such as potential tax deductions or credits, tax-advantaged earnings growth, and tax-free withdrawals for qualified education expenses. This development is expected to increase the attractiveness of 529 plans, which have seen a decline in total investments from $480 billion in 21 to $411 billion in 2022. Well, maybe people are just using that money for college. The ability to roll over unused funds to a Roth IRA after 15 years, up to the $35,000 cap, provides additional flexibility, making 529 plans more appealing, even for those who may not pursue higher education. This feature addresses concerns about limitations in case where students receive scholarships or decide not to attend college. Smart move because college is a waste of time. Providing options such as transferring funds to another beneficiary or converting them into a Roth IRA for potential retirement savings. Wealth advisors anticipate a spike in 529 plan usage due to these enhanced features. All right. So that's some good news. Now I'll have to do some digging in and see if you could say split that. Have a husband and wife, and you could put the money into, Mr. and Mrs. John Q. Public, and so I wonder if that 35,000 is per person that it goes to, or so. I don't know. But in the past, that's been one of the downsides I've never liked about 529 plans is that to make them really useful, you have to start putting money in when little Johnny or Susie is very small, so that you can build up enough savings, especially for college costs today. And but when they're one, you'd have no idea. Right now I have a granddaughter. She's about a year and a half. We have no idea. She could be a complete rock, or she could be a genius like her father. I don't know. But anyway, so what I used to do in the past was just use Roth IRAs. You can put that money in there. After 5 years, you can take the principal out. That was a good savings tool. It actually accomplished kill two birds with one stone. If little Johnny or Susie doesn't go to college, then you've been funding your retirement. If they do, you can take the money out, the principal out, tax free, because it's already been taxed, and use that for college expenses. So this just gives you another tool. So anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.